Hello guys, today I'll be taking you through the last 1 week Bank Nifty trade opportunities analysis, the way the market have performed. So I have taken Bank Nifty sport chart here, and I always get this question whether to use sport chart or futures chart. In fact, you need to use both because a sport chart is very important for backtesting because the long period of data will be available, and it's important because of the levels. Important levels we can see from the sport chart. But futures is what actually getting traded in the market, and futures will be trading slightly above the sport chart because the premium will be there. So beginning of the month, it will be charged at the higher premium, but by the time when we proceed and end of the month, the premium will come close to that sport. The premium will come close to zero, and the futures and the sport will sometimes to get towards the end will trade equally. Sometimes futures will trade in discount also. So my point is, for understanding the levels, for understanding the support resistance, also for back testing, the sport chart is better, and to understand the real trading activity, volume, VWAP, those things, futures is better because futures is what actually getting traded in the market. So that part is very clear. Now if you see here, what are the indicators we are using is, we are using simple S3, R3, we are using 20 MA, 200 MA. So I'm just looking at these indicators only for this session. And if you are attending the classes, the courses, or if you have already taken the course, we are using a lot of other setup also, like L Trimbles, other pivots, and the other EMA, Bollinger Band, and all those. But here, for backtesting, to simply understand Bank Nifty, the most important indicators that we use is 20 MA, 200 EMA, Camarilla, R3, S3, and VWAP also. So since we are taking sport chart, VWAP is not visible. So I repeat, this small line, it's 20 MA, this thicker one is 200 MA, this is Camarilla pivot is what I have taken, and we take only R3 and S3 levels. We ignore the other pivot levels. Okay. So now if you see today, market is opening here, going to R3, beautiful trade opportunity you're getting, and this can be very good confirm trade, because you see here, once they came here, you got a rejection, again they came here, you got a rejection, again they came here, you got a rejection. So you can see this is a double top or a kind of triple top. So when again market came here, you look at this, this is the same area you're getting rejection. But today, why it is important, more important, is because of our R3 is there. So right at this level, you should be in a position to take this reversal trade, and where it is going immediately within 5 minutes, it's giving you the target of S3. So you're easily getting the target of S3. So R3 to S3. And once they broke this 200 EMA, once they broke this S3, then once it gave a retracement to 20 EMA, this is another opportunity, because you're getting a rejection from 20 EMA, you're getting this S3 is broken, you're getting this 200 EMA is also broken. So after this, you may get a quick scalping opportunity on the downside. Again, they are coming to 20 MA, a scalping opportunity. So this is how the market was on this day. And if you look at the previous day, where the market is opening here, just like here also, opening here, going to R3, at the time of market opening itself, you will get it. It's not after the trades you will be seeing. So right at the market opening, just like what we explained here, similar is the pattern here, going to R3. And if you see the previous day, look at this level, you're getting rejection. So you can take a confirmed trade here, and first target can be 20 MA, or you can after this, maybe a support trade is possible at 20 MA. Even if you're not taking support trade, what you can do is, you can get another rejection opportunity at R3 again. And then the target could be, first time 20 MA, it will support. Next time, the chances are very less. Next target will be either 200 EMA or S3. From R3, they are coming to 200 EMA, S3, all these are strong support resistance. Now, when you get this candle here, you will be definitely getting an opportunity to on the upside, first till 20 MA, and once you get a breakout of 20 MA, you will get till R3, and once you get a breakout of R3, there's a retracement, you can get a trade, and then first time 20 MA, you get a trade. But will you take a trade here once it comes to 200 EMA? Yes, of course you will take a trade. The reason is, previous day, if you see, this is 200 EMA, look at this beautiful candle and support here. And this is 200 EMA. Then once it comes to 200 EMA, it's bouncing again. Once it comes to 200 EMA, it's bouncing. So again, once it comes to 200 EMA, and when you get this kind of candle, you look for an entry opportunity. So that's a day this previous day. So from R3 rejection, first target 20 EMA, second target 200 EMA. From 200 EMA, bounce trade, first target 20 EMA, second target R3. This is the once R3 is broken out, because you're getting a breakout here 2 times, attempted, failed, here also it failed, now breakout, you go on the upside. Now previous day. So market opened gap down slightly, gave a breakout candle or went above 200 EMA, broke out 20 EMA and broke out R3 also. So when they retraced to 200 EMA, so they gave a breakout retraced. So sitting here, then you get an opportunity on the upside. So this is how you will be taking that. And once it came to 20 EMA also, you are getting a small opportunity. But second time 20 EMA is broken, and then target will be on the downside till 200 EMA once this is broken. Okay, but the first opportunity is beautiful one. Once you get this beautiful candle, you will enter here. Okay, so this is the opportunity there. And then if you see the previous day, this beautiful day, they opened somewhere here and then they went up. Once they went up, you are getting an opportunity where the rejection is coming. R3, they are getting a rejection, first target till 20 EMA, just like this day. R3, first target till 20 EMA. From 20 EMA, they are going to R3. So similar way, first target from here, they are coming to 20 EMA. From here, they are going R3 again, just like this. So R3 to 20 EMA, 20 EMA to R3, then big rejection to this level. Similarly, so here R3, they are giving 20 EMA first target. Then again, if you want to, you can go for a call trade till R3. And then second time, once 20 EMA is broken, down till S3. But here it was second time 20 EMA is broken down till 200 EMA, which was a strong support, not till S3 because 200 EMA was here. But here there was no such 200 EMA. They broke, came to S3. Then taking support at S3 here, taking support at S3 here, taking support at S3 here. Once the 20 EMA is broken, after taking multiple supports, 1, 2, 3, 4 supports, then they are moving directly to 200 EMA. So once you get this candle, even here also you will make an attempt. As you see here, there's a kind of breakout the second time, bottom, and then second bottom, double bottom. So you may take an attempt and it may take stop loss, but this one will work in your favor and you go into 200 EMA. So this day also they are playing within R3 and S3. So here also this is R3 breakout day. Though here if you see R3 and S3, now today R3, S3 and S3 breakdown day. Okay. So these are what you can see. So this is what I have already explained. So let me go through this day also. So almost at S3 you're getting an opening. So it was a gap down and close to S3 you're getting an opening. So basically you can look for a bullish trade and you can look till R3. So it's going to R3 and above that you have 200 EMA also. So R3 you will get a rejection trade even if you are not entering here. After you get a candle like this breaking 20 EMA on the downside, now you know there's a big gap to like this much area to come. So after getting rejection from R3 or R3, at R3 also you can enter because it's moving from S3 to R3. So you're getting a rejection. Now we discussed about elder impulse in the course section. So if you use elder impulse, then it's going to be more easy. You will be getting that indication. But here we do not have enough time to explain all those things in this YouTube video. So we cannot do that. I hope this is clear. Anywhere the range S3 to R3, R3, then S3 and then broken on the downside. First time it gave the support, second time it broke. Okay. And then once it is broken, this support is broken, then what will happen? Once it comes to that level, it will act as a resistance. So once a support is broken, it comes again to that area, it will act as a resistance. So here it's given a rejection, here it's giving a rejection. So this is a beautiful day. First trade here, second trade here. Even if you miss this entire rally, it's okay. Because you're getting this trade and you're getting this trade here also. So you're getting this move, beautiful move R3 to S3. And then S3 to 200 EMA. That's how it is. Okay. So again, if you see this, they are opening here, coming below R3. And then from R3, what's happening? Coming to S3, 200 EMA. They are taking support again, going to R3. Then again coming here, 200 EMA support. So, but once it comes to 20 MA, they're breaking down, and then there is a small scalping opportunity on the downside. Then they try to bounce again, but it's not sustaining, just staying below the 200 MA and 20 MA. But here also the range initially was R3 to S3, S3 to R3, R3 to S3. After that, it's broken. So, 2-3 times they are trying to be in a range of R3 and S3. So that's how the last week market, if you see. So I hope you got some good clarity on how this is functioning. So it's a very good way you can look up to the Bank Nifty, and in the next session I'll be discussing Nifty. So thank you guys. I hope you like this video. Thank you so much.